Today, we're breaking down the acronym that determines your monthly housing budget. But we're not just defining it. We're going to show you how to save money in each category right here in Rockwall, Texas, or wherever you're watching from. So what is PITI? Those are the four factors that mostly make up your monthly mortgage payment. The P is principal. The first I is interest. The T is taxes. And the second I is insurance. Now that you know what PITI is, I hope you'll at least stick around when we talk about interest, because we're going to show you how to save six figures on that one. The principal and interest, the P and the first I, those are typically fixed. The taxes and insurance, the TI, those can tend to fluctuate. All right, starting with the P, the principal, that's the money that you're borrowing from a lender, right? And so using an example, say you found a house, it's $400,000 and you're going to put 10% down. Well, 10% of $400,000 is $40,000. So $40,000 minus the cost of the house, $400,000, gives you an amount of $360,000 that you're going to borrow. So that is going to be the figure that starts out to determine what your principal payment is going to be. So our example points out one way that you can reduce the amount of principal that you're going to pay, and that's by simply putting more money down. So if you ended up getting a conventional loan that required 20% down, 20% of that $400,000 would be $80,000 down. So you got the money that you're putting down up front, and it's going to reduce your principal, thus reducing your monthly mortgage payment. The second way you can save money on your monthly principal is simply by borrowing less. Borrow less than your max amount. That seems obvious, but you'd be surprised how many people get what they're approved for from their lender, and then they are looking to how do we max spend what we're able to use instead of buying the house that is the best fit for them and will make sense for the budget they want to stay within. A third way you can save money in this category is through simple price negotiation. Now, how much you're able to negotiate on the price can depend a lot on the market that you find yourself in. It could also depend on your leverage that you have as far as the position you're in, and also the particular property that you're deciding to make an offer on. We've been investing in real estate since the late 90s and have been licensed agents for over 15 years. We help our clients do this all the time. Now let's look at the I, interest. What is interest? That is the cost of borrowing. And so the 30-year fixed rate mortgage, for example, has been ranging lately between 6.04 and 6.2%. And so the cost of the amount on principal over that 30-year period will be whatever rate it is that you lock into, and hopefully you do a locked interest rate. So what are some ways that you can save money around interest rates? The first one is working on your credit a little bit. You can do that working with your lender to identify the things that make the most sense for you to potentially bump up your credit and get a better interest rate. The second thing you can do with your interest is shop your bank. If you've got one quote for an interest rate, you can check that against other lenders and see if there's a better offering for you out there. The third way that you can look at, and this is the one that can literally save you hundreds of thousands of dollars, is consider doing a 15-year fixed mortgage. Now, that's actually going to increase your monthly payment, but when those two loans, a 30-year versus a 15-year loan, are put side by side, you're going to pay, you'd be amazed how much less you'll pay on a 15-year versus a 30-year. Like I said, it could be several $100s extra per month, but if the monthly budget's not as much you're concerned about what you're really paying for that house, then a 15 years worth looking into. Another way that the 15-year helps you, not just based on time, is often a 15-year is going to be less. So we said earlier the 30-year fixed interest rate was ranging between, the average was ranging between 6.04 and 6.2%. And recently we saw the 15-year at 5.62% in that same time frame. And so Not only do you save on the time, but you also save on the actual. A fourth way that you might be able to save is, say that you went ahead and did a 30-year mortgage before you knew about the 15-year, or you just couldn't afford the 15-year at the time and you've come into some extra money through your job or otherwise. You can actually pay extra principal payment on most loans. Now, you want to check your paperwork. You want to make sure that that's going to be an option for that you don't have a penalty for prepaying. But prepaying your principal amount will actually bring down the amount of interest you pay over the long term. Let us know in the comments if you'd like to hear more about that 15-year rate, which is a way that you could save hundreds of thousands of dollars. All right, now the T. T for taxes, and in Texas, this is our property taxes, and they can be quite high if you saw my property tax video in comparison to other states because we don't have an income tax. However, the taxes are the money charged by local government for local services that might be provided. And this could include the police department, fire department, schools. So for example, in Rockwall, we have a city tax, and we also have a ISD tax. And the city tax is if you're within the city limits. Then we're also going to have, because Rockwall, the city, is in the county of Rockwall, we're going to have a county tax. There may be some additional taxes in there, but those are the ones that you should expect to see. In that tax video I did, we showed a range between 1.6 and 2.2, and it can even be a little bit higher and a little bit lower. However, if you're not sure where you're going to land, you could probably use about 2% in Texas as a starting point, and then as you identify a property, kind of narrow down from there. All right, so let's look at some ways that you might be able to save on your taxes. And full disclosure, I am not an accountant, and I am all for paying your legal taxes. I'm not trying to tell you ways to avoid paying legal taxes. However, I do feel like you ought to be able to save money where you can. The first place that I'd recommend that you save money on a personal residence, at least in Texas, is to file your homestead exemption. And your homestead exemption currently, that's going to get you $140,000 off the assessed value for your ISD property taxes. Now, your independent school district taxes tend to be the largest chunk of your property taxes. And so by bringing the value down, they apply a rate to that value, and then you're going to pay less in taxes. A second way that you can save on your property taxes is Texas is a non-disclosure state, and you are under no obligation to disclose to the government what you paid for your property. And so you might get something in the mail from them asking you to do that. Just know you're not obligated to complete that information and give it to them. Now, the exception to that would be if in your first property tax assessment that you receive, if that amount is way more than you paid, that might be a time where it makes sense to disclose what you actually paid for the property. But remember, you're under no obligation to disclose. The third thing that you can do to help bring down your property tax amount is to just contest your assessment each year when it makes sense. If it comes in very high, and you can work with an agent or there's companies even that will do this for you, to kind of look at the overall picture and make sure that you're not being overcharged on the assessment of your property. Let's talk about this second I, insurance, and this is primarily going to be your homeowners policy. However, it would also include flood policy if your property is required or you choose to have flood insurance. It might be part of your payment, or it could be treated separately. Also, it may include mortgage insurance if you haven't put at least 20% down. Some loans are going to have mortgage insurance that will require to be paid. All right, so let's look at some ways that you can save on your insurance. Now, one way is, like we said before, if you put at least 20% down, you don't have mortgage insurance, you don't have to worry about that cost. Another way to save is shopping your insurance, so asking more than one. There was a time where when we would help people buy properties, it would be one of the last things we really kind of worried about. Today, with the rate of insurance, I'm actually encouraging buyers to start that process well ahead of time. Even if they don't have a specific property identified, at least they can get ideas from their current providers and potentially shop around. Second way is bundling. I mean, you've seen the commercials, bundle and save, and all the. That's not an endorsement of that particular company, but that's true of a lot of companies. If they've got your auto insurance and your homeowners and maybe some additional things, they're happy to pass on some savings to you. Another way is just to inquire about different discounts. So different insurers are going to offer discounts not only for bundling, but maybe you have safety features in your home and that they feel like that reduces the risk and they can give you a cut on those. So those might be worth a little bit of investment now to save you money over time. A final way is potentially increasing your deductibles. Now, if you're going to do this, you definitely need to have some good savings in place to make sure that you're able to cover that increased cost. So with insurance, you make a claim, there's typically going to be an amount that you're required to pay before the insurance company pays. And if you're in a financial position to increase that amount, that can reduce the risk for the insurance company, thus reducing the amount of the premium that you pay. Now, just like taxes, I'm not an insurance agent. I'm not licensed to sell insurance, and I'm not trying to sell you. However, I do want to give you some of these money-saving tips. If you found anything helpful in this video, you might appreciate this one on what you need to know when you're saving to buy a home.